Good afternoon, everyone. This video is going to be for all of our futures Volatility Box members. I want to quickly take you through today's volatility, mostly because I think there's some good learning lessons, especially inside of both the Dow futures along with the Russell futures. We'll cover all four in this video, including the S&P, the Dow, the NASDAQ, and the Russell. If you trade the micros, you can follow along with the micros as well. And if you trade SPX, you can follow along with SPX as well, which gave you a really nice 0 date to expiration options trade today. Now let's start with the S&P 500 here first. Now the S&P, we started the morning off with our scalper volatility box models. For our setup, we're looking for a breach of either side sign lines, which took place in the 7 to 8 a.m. Pacific hour. With the sell side activity that we had, the S&P breached the lower volatility box's sign entry lines. That's step one. Step two is this edge signal arrow. Once we see that, we know that we officially have our reversal rules met, our fade setup rules. We're looking for an entry at the sign entry line. In the S&P, we never got the pullback back to the sign line. The only entry that you got, for those of you that are SPX options traders, was the entry inside of this zone here, which allows you to build up a little bit of a cushion. For the actual futures contract, I'm waiting for the sign line for my entry, and my risk on this particular trade is a stop outside of the clouds, requiring me to risk about 10.5 points. We didn't get the pullback in the S&P, so this was not a valid setup for me. For SPX traders, this little pullback right here was the opportunity that you could have used to build that SPX position as we came back inside of our zone. In terms of our first target on this trade, we were looking for the same 10.5 points that we would have risked. That 10.5 target was hit in this move up. The second target was at the opposite side's target line, which was a move of about 19 points hit at the end of the lunchtime hour. So that was the trade inside of the S&P 500, really a trade for SPX traders. Now for futures traders, the Dow futures is the one that gave us a setup which met our trade plan rule. Same idea, using the scalper volatility box models, you'll notice the 7 to 8 a.m. Pacific hours volatility much less in the Dow compared to the S&P and the NASDAQ. In the S&P and the NASDAQ, we came all the way down to the sign line. In the Dow, we fell shy of that. It's in the next hour, 8 to 9 a.m. Pacific, that we saw volatility pick up when we had this rally inside of Dow. Same idea as the S&P. We're looking for a breach of our volatility box models. That's step one. Step two is the edge signal confirmation. Now we don't see that edge signal before the Dow futures go outside of their volatility box models. When this red candle happens right here with this wick, that's our very clear sign that here we've exceeded the scalper volatility box models, no longer should be interested in scalping. We need to adapt to this new volatility regime. We switch down the line to the aggressive volatility box models, and we repeat the same process. We're looking for a breach of our sign entry lines. That's step one. Step two, the edge signal confirmation. And once that happens, we want an entry at the sign entry line. Our stop is outside of the volatility box clouds, and in the case of the Dow, this was a risk of 42 points, 43 points. That's what we were looking for the first target, and we hit the first target with very little heat in this red candle right here. The second target is the opposite side's target line, which was a home run target of 109 points, and that's where this trade really paid itself off. Now, after we hit that home run target, so hitting T1 and T2, we then breached the long side entry now for a long here, the sign entry lines. This happened at the edge of the hour, so I'm not really interested in trades. Combine that with now entering the lunchtime hour, that's a double whammy for me. So I'm sitting out of this particular long. And if you did take it, it hit its target really nicely, going all the way now into the other side's volatility box zones, triggering a short. Same idea, lunchtime hour. I found nothing good happens essentially participating in trades, opening new trades during this hour. So I sit this hour out. Same idea if you took the short here. We had the slight move, but we fell shy of T1, free information. And as soon as we had the rally, that was our sign that, hey, even the aggressive models inside of the Dow are no longer being respected. we need to adapt and switch over to the doomsday aggressive models, and those models were not breached for the remainder of the day. So the Dow was very interesting with the initial short side entry that it gave us and the volatility that picked up when you contrast it with the S&P and the NASDAQ. Speaking of the NASDAQ, we come inside of the NASDAQ next, starting off again with the scalper models. The NASDAQ in the same 7 to 8 a.m. hour where the S&P breached its model, so did the NASDAQ. The NASDAQ was a touch and go, however. We breached the cyan entry lines, that's step one, but by the time we got the edge signal confirmation, we never got any kind of pullback to the cyan entry line. The NASDAQ just continued to run away, and we didn't get any kind of entry inside of the entry zone either. So nothing inside of the NASDAQ worth really talking about. Finally, we had the Russell futures. Now, the Russell was quite interesting with the volatility we saw, especially in that 7 to 8 a.m. Pacific hour. With the Russell, we start off with the scalper models. We breached our cyan entry line in that same 7 to 8 a.m. Pacific hour. However, we continued to keep going outside of the clouds before we saw our first set of edge signal arrows. Very clear sign inside of the Russell that, hey, the scalper is not being respected. We could not see price action be contained inside of the clouds before we saw our edge signal arrow. We need to adapt. We switch over to the aggressive volatility box models. The aggressive model, same idea, we repeat. Step 1, looking for a breach. Step 2, looking for the edge signal arrows. We get both of those. The beauty of this particular trade inside of the Russell was you were able to get a much better entry than even the cyan entry line, able to cut your risk down by nearly 6 points. The risk on this particular trade, depending on where you got your entry, you were able to have to about 3.5 points, down from the original nearly 9 points that was required. Now, we did not hit that 9-point target. We did hit the target based off of the risk from the entry in the clouds, but that 9-point target we did not hit. Instead, as price just continued to keep chopping around here, we then triggered a short side setup in the 10 to 11 a.m. Pacific hour when price action rallied into our volatility box zones. That flattened out the existing longs and now triggered us into a new short side setup here inside of the Russell futures. Same idea, looking for a breach of the cyan entry line, along with the edge signal confirmation. We get both of those inside of the Russell. The risk on the particular trade inside of the Russell was 3.3 points worth of risk. And inside of the Russell, we went all the way up to essentially the stop before then seeing the Russell reverse. This hit my stop here, so the long was the winner, the short was the loser inside of the Russell here. The Russell overall was just a messy trade given that we didn't even hit the original morning's first target. So there you have it. I think a very volatile day inside of our 4 major futures markets, each one breaching their models, but each one doing so in a different manner. The S&P breached and rallied almost right away, was a good trade for SPX traders. Dow futures was good for futures traders. The NASDAQ just breached and almost ran off right away. Didn't give you much of an actual entry in terms of a pause. And the Russell, in my opinion, was the most volatile from the day. Give you a really nice long side entry from the morning, but that second short side entry, along with the fact that we never actually got the follow through from the initial first target, left a lot to be desired in the Russell. I hope you found today's video helpful for our Futures Volatility Box members in understanding how to make sense of the models and what setups triggered, how to use the models, and even tweak them to work for your particular trading style. Take care, everyone. Good luck trading, and I'll see you in our next update.